Hi, this is Kim Greenblatt with a bad tax idea and a good tax idea. First off, bad tax idea. Getting married without checking on the tax ramifications. A lot of couples hear that getting married is great for tax purposes. It can be, but if you do it wrong like a lot of couples do the first year, you both may end up owing money. You're considered married for tax purposes on the last day of the year. Got that? Here's an all too common thing which happens. John makes, for example, $72,000 a year as an engineer, and his filing status for, say, 2007 with one exemption would have a tax liability, ballpark of about $13,424. This takes into account the standard deduction and his status. Let's say Susie makes $30,000 as a teacher, and for filing single for 2007 with one exemption, should have a ballpark tax liability of about $3,509, and that takes into account her standard deduction and status. If they decide to get married and have not started to take into account their tax liability, they potentially can face a joint income of $102,000, which normally is great, but the ballpark estimate of their tax liability is then $15,848, which is lower than the $13,424 plus $3,509, $16,933. The big problem is both John and Susie, anticipating that they're going to be married, each end up filling out the W-4 at work and end up taking two exemptions each. And they indicate married filing jointly. Well, that means then they don't have enough money put away for taxes and they're going to get sticker shock at the end of the year. Maybe they won't change anything with their human resources department and they didn't update the tax tables in their HR department. A lot of things could happen. Basically, the tax burden would be on our heroes, John and Susie. So here's a good tax idea. When you start planning for the wedding, or if you're going to elope, and you work for somebody, go to your human resources department and change your W-4 only after you've sat down and crunched the numbers as to what your combined income will be. Once you know what your tax bracket is, and depending on what you want as a couple, do you want a refund? Do you both want to owe a little? Plan your deductions accordingly. Your human resources department could also withhold extra money each paycheck with additional withholdings. You can also, if you're an independent contractor, make sure that you're filing quarterly taxes for the Fed in whatever state you're in. A very general rule of thumb is that the person in the marriage who makes the most money should take the exemptions on his or her W-4. The other spouse or person should generally take a filing status with 0 with one allowance. For more information, take a look at publication 919, How Do I Adjust My Tax Withholding? And please visit www.kimgreenblatt.com. That's www.kimgreenblatt.com. And if you're interested in more savings ideas, I've got a book, Bad Tax Idea, Good Tax Idea. Thanks for your time, and happy tax planning.